This is Greg Michaelowski, and this is a Forex commentary for Forex Street for Monday, November 29, 2010. Let's take a look at the euro versus US dollar from a technical perspective here. And what we can see here is that this 38.2% retracement level of this move up from the low that we reached in June to the high that we reached here in November. 38.2% retracement was the initial support for this currency pair on this day. The next day, the market came down. These are days last week on Wednesday and Thursday. The market came down, tested the 100-day moving average. That's a blue line in this chart. It's a significant moving average line that the market does pay attention to. Note how the market was not able to get through those levels and it remained above it, closed above it. Yet in Friday's trade, the market was able to move through that 100-day moving average, stay below the 38.2% retracement, move through the trend line that connects the lows from June and September, but it was not able to stay below the trend line here. It closed right near it on Friday's trade. Today, what do we see? We see the market staying not only below the 100-day moving average, but starting to make further moves to the downside here. Broke through the trend line, broke through the 200-day moving average at the 131.29 level, broke through the 50% retracement of that same move up from the low going back to June to the high that we saw in November. That 50% comes in at 130.78.5. The market low reached a level of 130.63 and found some buyers against that level that just forced the market back to the upside above the 78 level, currently trading at 130.86. Now the market, the corrective move that we saw, now I move to the 5-minute chart, took the price back up toward this 131.13 level. What's the significance of this level? Well, when the market broke through the 200-day moving average at 131.29. I'm going to go back to the 5-minute chart. Here's that 131.29 level. The market broke through that level. We found some support, and then we could only get up to that 13 level right here. You can see for about 20 or 25 minutes, the market stayed below the 13 level and moved down to our low. So we're looking for if the correction could hold that level on the top side, we should see further selling pressure, and that's what we've seen. It does seem that the market continues to be long euro versus US dollar, at least from the trend to today, and this may continue to pressure the pair until all that liquidation does take place. Plus, we have the situation within the Eurozone, which is keeping that pair under pressure from a fundamental perspective. So, how do I trade it here today for the rest of the day? What I'd look for is support against this 78 level. Now we're currently trading at 80 here, so we're at that key support level. If the market is able to hold that 78 level, continue to find buyers against that level, then look for continued short profit-taking buying, maybe some new buys coming in the market from an intraday type basis, and look for a move back above the 13 level to confirm a further move up that may take the price back up toward the 38.2% retracement of the move down from today's high to the low. That level comes in at 131.54. It also corresponds more or less with the 100-bar moving average on the 5-minute chart, which is on its descent to the downside here. So key level here for the euro versus US dollar, watching 130.78. If that level holds, things will look a little bit better from a shorter term intraday perspective. If the level gives way, look for a test of the low and a potential move even lower for the euro versus US dollar. Next level of support 130.37, but the 61.8% retracement can also not be ruled out in the long term. That comes in at the around 128 level for the euro versus US dollar. So there you have it. This is a Forex commentary for FX Street, brought to you by Greg Michaelowski at FXDD.